Welcome. Thank you for lending an ear to the Voice of the Times for Wednesday, February 9, 2022. Brought to you by Wilcon Depot, the country's leading home improvement and construction supplies retailer. Shop conveniently 24/7 with the Wilcon online store. Just go to shop.wilcon.com.ph. For today's editorial, Digital Economy Requires Informed Policy. In an article written for the Asian Development Bank's or ADB blog last week, 3 experts from the bank's Economic Research and Regional Cooperation Department revealed that recent research on the digital economy in 2020 had a surprising result. In spite of an enormous increase in digital activity due to the coronavirus pandemic, the economic performance of the digital sector dropped sharply in most countries. While there are a number of implications from these findings, the biggest one is that there is a clear gap in defining and understanding exactly what the digital economy is. As a consequence, any policy aimed at increasing digitalization or boosting the digital economy that is crafted without first answering that question will be faulty. According to data cited in the article from the UN Conference on Trade and Development and the research firm Telegeography, the increase in digital activity for work, school, and shopping during the pandemic was massive. The global internet bandwidth increased by 35% in 2020, the largest one-year increase since 2013, and increased again by another 29% in 2021. Yet, in spite of this, the digital economy declined almost everywhere, with only a few exceptions. This could be attributed to the general economic downturn reducing consumers' purchasing power and creating supply chain problems. But the implication is that digital activity increased so much that the digital economy should have grown as well, or at worst experienced much smaller declines. Some evidence supporting this notion lies in the performance of the digital economy in a couple of exceptional countries. Here in Asia, for example, the digital economy in China grew by 8% in 2020, much faster than the overall economy, which expanded by 2.3%. In Malaysia, which suffered a 5.6% contraction in GDP, the digital economy grew by just under 3%. The ADB researchers set out to measure the contribution of the digital economy in various countries, according to a framework that broke it down into 3 parts. The core digital sectors, which are industries that produce a well-defined set of digital goods and services, digitally enabling industries, and digitally enabled industries. Although the researchers did not provide examples in the brief article summarizing their work, some obvious ones come to mind. Manufacturers of gadgets or software would be examples of core digital businesses. Digital payment services would be examples of digitally enabling industries. And the familiar ride-sharing and food delivery apps we all use would be examples of digitally enabled businesses. There were 2 sets of findings from the research worth noting. First, the overall digital economy makes a substantial contribution to the overall economy in individual countries. Core digital sectors account for between 2% and 9% of GDP, while all 3 sectors combined account for between 17% to 35% of GDP. Second, the growth of the digital economy causes a great deal of disruption in employment and participation in global value chains. The ADB researchers cited their findings from Germany as an example of how the employment landscape can be drastically altered. Between 2010 and 2016, overall employment in Germany's digital and digitally enabled sectors increased by about 350,000. During the same period, however, efficiency gains, process changes, and technological improvements cost almost 1.3 million jobs. Those were not really lost, however, as much as they were just shifted. The increase in demand for digital and digitally enabled products and changes in consumption pattern added about 1.65 million new jobs in different areas. The researchers also noted that digital sectors seem to be more sensitive to trade conflict and disruptions. They increased their participation in global value chains faster than non-digital sectors between 2014 and 2018, but declined twice as fast as the other sectors between 2018 and 2019 at the height of the US-China trade war. The bottom line is that despite obstacles, more digitalized economies are recovering faster from the pandemic than less digitalized ones and can be expected to grow faster, but only if policymakers clearly understand the digital economy so that critical issues can be correctly identified. Those who are vying for the chance to be our country's next policymakers should know this well. And that's the editorial for Wednesday, February 9, 2022. For more news and information, get a copy of the Manila Times on print. Subscribe to its digital edition or log on to www.manilatimes.net. Follow us on Twitter, Facebook, or Instagram. And listen to the Voice of the Times.